Hi, this is Shane with The Rational Trader. It is Tuesday the 24th of July and live result 165. And comparing to the simulation we're doing over here that incorporates volume profile, minus 150. So interesting, yesterday I lost 270 in the live account and the simulation was almost 400. So what I'm really curious about is if, it's only 2 days, but the first thing that popped into my head when I saw these results was that if we can keep the losses smaller like this by taking this approach, then that will be worth it for the because it makes it easier to withstand, right? So I think one of the problems that we have with the current method is that you've got to really still have to be very disciplined in managing your risk, and it can get difficult when we have some of these. We go through these stretches where take a fair number of max losses. So let's see here. Let's walk through this and see what we have. I started at 645 today because the overnight range was more than 40 points but less than 60. We got long here. I actually live traded that. I recorded this live, but the recording got messed up, so we're going to have to just do it this way. We get just enough to get first target. It's a little almost heartbreaking. You're like 2 ticks from first target. So we take 2.25 point or 2.5 point loss there total on 2 contracts. Same thing happens here. We go short here. The market's going up, but we get enough to move the stop to entry -5. So take a 2.5 point loss there. We short here, right there. All right, and then first target is here, and we get the second contract gets taken out of the trail there. You saw the arrow pointing here because what we were talking about in the room was we getting stopped out right there on that little pullback is really painful, and what we want to be able to do is we want to give it more room, and like 30 ticks instead of 20 ticks. And the problem is that with a single contract, when you do that, the replays very clearly show that you do better with the 20-tick trail. And so one of the things I want to investigate here that I have not yet had time to do is, since I'm taking profit here at 20 ticks, I can afford to trail bigger. And does that, what are those results, right? It's very easy to test that. I just need the time to do it to see. We may very well find out that you're better off trailing by 20, and we'll see. There's no need to guess. We have the tool here to just do it and see. In this case, we don't get much follow through. The market chops sideways here before it goes lower, so you'd likely get stopped out there anyway. Let's see. So we chop around the Globex low there, or I'm sorry, the Globex high, and then no signal through here. This signal here is too aggressive to take. What a beautiful fall. That's unfortunate. Chop, 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 and what we see here is that we've had this strong move, and now you start to see the striping come in. It says, don't take longs, don't take shorts, don't take both, just stay out. Here, we're allowed to take longs, and we take a long here. We get 5 points, and then stopped out for 1 tick, so stopped out at scratch. So what happened here is the market had set these levels here and here. All right, but then this one was far enough away in distance, from the previous peak that it says, okay, well, longs are okay now. You broke through that resistance. You also have this fall was big enough that you can now take the long. So what we do there is we want to make sure that if there is a resistance level up here, we will take a trade against it as long as there's enough room. And currently that's defined as 40 ticks from the peak. That's just the value that I'm using. So anyway, we get long here on a 185, which is a failed pullback. So that signal's there. And then we wait for the next up bar, which is there. Make a little bit there. Market's rolling over there. There's a 251 here, which would be really nice. But we're in, the background's purple, which means no shorts. And the reason is that you can very clearly see this business going on here. So we would not have gotten filled given the way we would have placed the order right there. That's unfortunate. And then then we get a short here, which takes a 10 tick loss. So actually 11 ticks on 2 contracts, and that's it. That's 9 o'clock, and so that nets us 165. So now let's look at the volume profile based method and see. Now I have the volume profile itself turned off so that it doesn't confuse us. Some people were confused by seeing the volume profile at the end of the day and its low volume nodes, when what we're interested in is what is the volume area at the point in time that we're trading. So we'll review that again here real quick. So here's the open. Now the light blue line is the value area high, and the light lavender line is the value area low. So what that means is that as the profile is drawn by this point in time, that 70% of the trading has occurred between these price levels. And you can see as the market climbs, those levels change. Okay, so 70% is now, it's expanding. The red lines are the low volume nodes, and the orange lines are the low volume nodes at that point in time. So the price levels at which the least amount of trading had occurred. All right, and the reason they're red and orange is that what I do is I'm tracking the nearest low volume node above and below each price bar. Okay, and then what I want to do is I only want to take trades when I'm near a low volume node or at a volume value area line, so value area high or low. Okay, and so the orange bars are that. They're showing you a case where I'm near a value area high or low, or I'm near a low volume node. All right, so we start trading 645-ish right in here. And this is actually the same trade we took in the other in live. So we get long here, not quite enough to get first target and take a small loss. You can see that there's a bunch of low volume areas here that we're working with here. We fall down to the point of control here, okay, and bounce through. Now this area here, I think there's a better example later on. We'll talk about it. So from the point of control, we travel back up. There's a bunch of opportunities here for trades, but they're all coming back. No action. Up here, I want to chat about this for a minute because this is clearly the place where I want to be making a prediction. All right. So I like what I'm seeing in terms of that's the correct location. I'm at the value area high. You can see what happens. It happens all the time. You bounce off of it. All right. The other occurrence is you blow through it. Okay. And then the third thing that you do is you start to travel sideways and build volume, and then that'll end up becoming the new point of control. All right. So the thing about this area here is that when I look at these bars, I really think that bar ought to be orange also, and it's not. In fact, as soon as you go orange here, right? So this means, okay, I'm close to a value area high, start making predictions. It seems like we ought to stay in that mode until we kind of leave the area, which is here. Now, the value area moves up, and that's fine. The price moves up with it. But you can see that bar also seems to me like it ought to be orange as well. And in looking at it, it's the way the algorithm is defined. it's because I'm using the closing value of the bar. And here, this closing value of the bar is closer than this one here, right? So I got to work on that. There's a change there that needs to be looked at. And what that does is that gives us more opportunities to find the good order flow based trade that we're looking for. Same thing here. That bar should be orange, I think, if the one right next to it is. Because if you look at it, it's even closer to the value area high. It's also, when I look at that, it's also very clearly a rational trader price reversal pattern. So I'd like to get a prediction off that bar. The other place to get one would be off of this bar here, as the market, you see this little pullback here, and then it rolls over. So. Okay, so there is some there's an improvement there, I think. Well, rather, there's an adjustment. I assume it's an improvement because that's a very human thing to assume. But logically, that's what I'm after, so that's what I want to do. So then what else happens here? You'll notice here, there's a low volume node here, right? And it adjusts down a bit, and adjusts down a bit, and adjusts down a bit. You can see that this is a spot where the market is bouncing. It's testing this level. So as we get to that node, we make predictions, and to me, this is exactly right. I should be making a prediction there. This is fine too. All right, the market's fallen, and now let's make some predictions. We're far from the point of control. The point of control is up here now. All right, this area here is not correct, I think. So let's talk about that. So the problem here is that I've got a low volume node here. The market's, not a lot of volume is traded at this level, but the point of control is right there, meaning the most volume has traded right there. So you've got this. There's a sort of a cliff here, right? If you look at the volume profile at that point in time, you'll see that this is really big, and this is really short. And so the problem is that when you're that close to the point of control, I don't want to take a trade this close to the point of control. Right? This is where most of the trading has occurred. It's likely just to chop sideways. By definition, the most activity has occurred here. The most buyers and sellers met and agreed that this was a good price. And that's fine for them, hey. But I'm not interested in that. I'm interested in extremes. I want to travel quickly to this point. So I want to get short up here. I'm sorry, I'm not up there. I want to get short up here and travel back down to the point of control. All right, that's what I want to do. I don't want to get into the market where it's going to be super choppy. So we talked about this in the room as well. There's clearly an adjustment that needs to be made that says, look, I want to do something at a point at a low volume node, but I can't be too close to the point of control. So I need to do something there. There's an algorithmic change that needs to occur. Let's see. So then we get opportunities here for predictions because there's a low volume node, but also because you're now at the value area low. All right, this is exactly what we want. All right, our expectation is we're going to either bounce off that or blow through it, and you see exactly what happened. We blew right through it. My prediction there, the machine learning's prediction, is long. And so the order flow looks long. It looks like that 187 is that it sees this fall, all right, and continuation, and its prediction is that this pullback will fail. Right? It's not correct. We end up not taking a trade here because we require an up bar after we see either on that bar, signal bar, or just after it. So we're protected in that respect. Let's see, what else did we get? So nothing through there. We see this a lot where you bounce back up to the value area low and then can't get through it. So that's the correct place to be looking. We get short here. Another example of, I think this is a terrible trade. We're taking the trade, or rather we're making predictions here because we're close to this low volume node right here. We're within 10 ticks of that. All right, but you also see we're right at the point of control. This is, to me, this is just insanity. We don't want to be doing that. All right, so that's what I'm going to be working on here. To basically, I don't want to. I want these bars to not be orange. That's the simple way to look at it. I don't want to be making predictions when I'm right at the point of control, regardless of how close or far away I am to the value area, high or low, or any other low volume node. If I'm near the point of control, then don't do anything. Just stay out. And this is why you can see here. You're just rotating around it. All right, and we don't want to get involved in this. Let's let this resolve itself, and then we'll get involved. Like say here, where we, right here, where we meet this low volume node that's been sitting here all this time. All right, make a prediction in here, either for a reversal back to the point of control, or to blow through it as happened. Okay. In this case, we don't find anything there. The machine learning system doesn't see anything there. These predictions come back 0. 0 meaning no action. Let's see here. We come up and we take a short. Okay. So which the market's turning here, so that's bad. We take a loss. You can see what's happening. We're bouncing up to these low volume nodes and making predictions. If the bar is orange, a prediction was made. If there's no code there, then it was just the prediction was don't do anything. Same thing here. We're down at the low value area. Another place I'd love. This is exactly the right place to be looking. All right, because the market will come down to that value area and then rebound exactly what it does here, all the way back to the point of control. All right, no prediction there though for us. Let's see, is there? And I think so. Along the same lines, because I'm using the closing value of the bar. Like that bar doesn't get included as something that should be evaluated, but that bar is within 10 ticks of that. The low is. So I need to change that algorithm. It's a little trickier with the value area high and low, and the reason is that you could be approaching that value area from either direction, and so your algorithm is more complex. It needs to take that into account, and I didn't do that initially here. I just took the easy way out and use the last value. But really what I need to do is, if you're below the value area low, use the high, and if you're above it, use the low, and compare that way. So I'll take care of that. It's not difficult. It's just tricky. Let's see. Then we take a long. We take a short here, which is exactly what we want to be doing, but the market is just volatile enough to stop us out here, and we miss this beautiful long fall. So short at 74.34 right there. And it's one of those cases actually where no, it wouldn't have mattered. So we get 10 ticks, move the stop to entry -5, and take a smaller loss. If we didn't get our 10 ticks, we would have actually taken a full loss. It's just jumpy enough there that the stop is just too tight. We roll over and we miss this beautiful long fall. This would have been nicely profitable. That's unfortunate. Okay, so now we're down here in price discovery mode here. We get a low volume node there, nothing. You'll also notice that with this approach, we're trading all day. We don't stop at 9 o'clock. So here is another low volume node here. We test it from below. We actually get a short signal there, but you don't get filled, is why there's no trade there. And then there's another low volume node. It's the same one, right? It's this low volume node that's up here. It looks like it's different because you see this blankness, but really what happened is this price level is a low volume area, but I'm only drawing the line for the one that's nearest price. So another low volume node developed down here, and so that's the one I care about when I'm down here. But as soon as we come back up, this low volume node's back in play. You can see this is exactly what we want to do. get up here, make a prediction. What the prediction is that this breakout will fail, and it does. We get filled at 0775, make 5 points, and then get taken out on our trail for 1350. So that's making up for all the earlier losses plus some more. But then we're going to give some back here in a little bit of chop here. So we get a what is this here? There's a long. The flags are too big. I can't read it. 102 is a long, which looks right to me. Oh, I'm sorry. It's this one right here. My mistake. So that's a short prediction off of this low volume node, and we take a 10 tick loss on 2 contracts there. And then we take another short here, so that order flow continues to look short, and we get enough to move the stop to entry -5, so we give back 2 1/4. So our ending result there in sim, mind you, it's -150. So interesting. I like what I'm seeing here. We're 2 days into live simming this. We'll see. A couple of adjustments to make. I'll see if I can get those made tonight. That would be nice if I could do that. And then, we'll see what tomorrow brings. So far for the week, down 100. Okay. That's it. So everything I've been talking about here related to the volume profile, low volume node, is we will be discussing on Saturday at the machine learning update webinar, which is at 11. Surprise.